The problem with gold and silver is the counterparty risk. That's what several of you said yesterday on the stream, and it's actually true from 3 perspectives. If you buy paper gold, the actual gold backing can be 10% only, and if the issuer goes bankrupt, your money is gone. And secondly, even if you buy physical gold in storage, you might still have a counterparty risk, because in many cases, it's not in your name, you have jurisdictional risks, confiscation risk, insurance risks, and so on. And of course, you can store gold under your bed, but, well, that's not practical and it's not risk-free either. But there is actually a solution, and we have the man right here on the channel. Gregor Gregersen, CEO for Silver Bullion, which is mostly about gold. So, what is it, Gregor? Welcome to the channel, first and foremost.
Thank you very much. Silver Bullion is all about what we call systemic wealth protection. It's essentially about opting out of the financial system, taking assets, putting in a physical asset like gold and silver, and ensuring that you have no counterparty risk, jurisdictional risk, or currency risk. That's essentially what we focused on in providing a plan B in a safe haven, in a safe jurisdiction.
So how does it work?
When you take physical gold and silver and you buy some actual bullion, you become the owner of that bullion. So when somebody buys from us, it's being sold through an invoice. That invoice ensures that the bullion is not on our balance sheet, so we cannot encumber it, we cannot transfer it somewhere else, but it's your private property. If we take that, it's called stealing. So basically, it creates a very clear distinction and protection towards the customer. We then track that gold or silver individually by parcel. We provide you with photos. We have 4 audits per year from 2 different auditors. And we test the bullion. So we use ultrasound, electrical conductivity, magnetism, density tests to make sure it's real gold, so we can authenticate it and we guarantee it. And we have one of the best insurances on top of that. Those combination of things and the fact that we are only storing in Singapore and we only have jurisdictional exposure to Singapore means that those assets are essentially going to be there whether we have hyperinflation, whether the US dollar might go into trouble, whether we have mass bank failures, or any of these sort of things happening. And I've created all of this originally because in 2008, I was a senior data architect for a large bank. I saw Lehman Brothers go bankrupt. And I realized how fragile our financial system really is, how much leverage there is, how much interdependence. And if you build things like that, ultimately you end up with a house of cards. And, some days a bailout might be too big for the government, or we might not be bailing somebody out in time. And the whole thing might just fall apart. And physical gold and silver was one of the best ways I saw at the time to protect somebody against that. And that basically became my mission. And after around 15 years, we managed to sell about $1.5 billion worth of precious metals. We are storing about $1 billion worth of Singapore dollars, which is about $800 million US dollars worth of gold and silver for our clients. And we're now building one of the largest vaults in the world to really symbolize that resurgence of physical gold and silver as a mainstream asset class.
And just to clarify, you don't only serve customers in Singapore, you serve customers globally. Is that correct?
Yes. We only have about less than 10% of our customers are Singaporean. 90% are international. The majority are US customers, European customers, and Australians.
For those of you in the audience who haven't been to Singapore, let's paint a little bit the picture. Gregor, you live there. Mark, you've lived in Singapore. I've spent a lot of time in Singapore when I worked in Asia. Singapore is a very safe place. If you leave your laptop in a Starbucks cafe and you go out the whole afternoon and you come back, the laptop is still there. Outside the office, at one point it happened that someone had stolen a bicycle and there were like police there. They were putting up signs. They were looking for leads. There was like a whole operation. A very safe place. Is that fair to say?
I always joke that only tourists tend to steal things in Singapore. We did have one gentleman, I forgot where he's from, but he tried to go to a bank, pretend to have a pistol, managed to get some money, and got caught 10 minutes later.
Yeah.
And there was a tourist from somewhere. So I always remember that. But Singapore is extremely safe.
Yeah.
It's also a very rich country. And it's a rich country because the Singapore government philosophy is that it's my job as a government to make sure that people have a good education. It's my job to make sure the conditions are right for companies to create jobs. And it's your job as a citizen or resident to find a job.
Yeah.
So there's no unemployment help, say healthcare and so on are pretty much taken care for in smart ways. It's an extremely well-run country which tries to base itself on the idea of meritocracy, equality, opportunity. And so in many ways, it's been ranked the most business-friendly country in the world, if I'm not wrong, by the Heritage Fund recently. So it's a really good place.
A very stable country and very well run. I think so too. Let's dig a little bit more into this, and really thank you for coming here today, because we had a stream yesterday and a lot of people said that, but actually you can't buy gold. If you go to some investment broker or something and you buy gold, you're not really buying gold, you're buying some sort of price tracker for gold, and you're having then a counterparty risk to the issuer. But then I felt that there is actually a solution. How does this work? Mark, you prepared some questions.
Yeah, sure. I think we can dive a little bit more, because obviously, Gregor, I know you are the CEO of Silver Bullion, and you have also a couple of other entities offering related services. So maybe you can start with an overview of the different entities and services which you offer, and then we can go into each of those areas a little bit more detail.
Sure. So Silver Bullion, to come back to the original question, was built to only have physical gold and silver and owned by the client. So that's our basic rules that we have, and everything is built on top of that. So Silver Bullion is actually the parent company, which allows for the buying and selling as well as collateralization of bullion. When we say collateralization, we essentially build a system whereby one client can lend money to another client in a peer-to-peer system. It's the interest rates that they decide on, and we essentially act as an escrow and a custodian on this. And this system has done about $550 million worth of loans in the last 7 years, so it's been quite successful. Then we have the Safe House, which is our vaulting company. So the Safe House purpose is to essentially safeguard and store precious metals. We're also doing some EV metals like nickel, and we can either store it on what we call self-storage, which is where you can buy and sell it online, or you can have safe deposit boxes. You can essentially have a do-it-yourself storage option, which has higher privacy for some people. And then lastly, then we have the reserve. The reserve is a facility in which the Safe House and our other business segments are housed. It's a 180,000 square foot facility. It's currently being renovated. The Safe House is on the 3rd floor, and the other floors essentially are under renovation. And when it will be completed, this facility will have a 15,000 ton capacity for silver and similar metals, which is humongous. It can basically store all of COMEX silver and Shanghai Gold Exchange silver in one location. To give an idea, that's about 500 million ounces that we can store. We also have 15 class 2 gold vaults, which are the type of gold vaults where you put gold in and you manage to get the lowest insurance premiums, which is one of the main costs when it comes to storage of gold. Each one can hold about up to $1 billion worth of gold. So it's really a large facility. And then another company we have is called Littlebit. And Littlebit is a software development company, which essentially has written most of the software that we use and a number of the products, the peer-to-peer lending system, our accounting system, the vault management system. All these systems, the website, were really built in-house. And all of the software development is done a little bit. So to sum it up, we're sort of geeks with vaults, essentially.
And so let's say we spoke before about counterparty risk. Maybe you can dive a little bit more in, let's say I buy some gold bullion and I store it in the reserve. How is that counterparty risk, so to speak, managed? And how is the gold insured? And against what is it insured?
So when I first started the company, it ended up being small. We had to outsource, and we outsourced to one of the large bullion storage companies, international ones. And there were two big issues which I found out from the bat, which I wasn't comfortable with. The first thing is there was a statement saying that if your gold mysteriously disappears, or your silver, you have to identify the vault operator. It's not their fault. So that was very worrisome. And most people don't realize that is actually the industry standard. So when you go talk with somebody, they'll tell you, oh, don't worry, it's got all risk insurance. But in reality, all risk insurance doesn't mean all risk covered. It's a technical term which means all risk covered unless excluded. And
I didn't get this. So can you clarify this? So it's always insured, but...
Yes, an all risk insurance policy is a technical term which means all risk is covered unless excluded. So to understand what it means, you have to look at the list of exclusion, which usually are not made public to the client. And what you will usually find is a mysterious disappearance clause. So, and that's very worrisome. Now, the reason why that is in there, let's say, for example, that I'm storing gold for you, and somebody comes in with gunpoint, steals that gold, and runs away. And I go to the police makes a police report. It goes to the insurance company, and the insurance company will pay based on the police report. If I have an inside job, somebody stealing inside the company, then it's the same thing. I would have to go to the police. The police report is the basis for a claim. But if you have a mysterious disappearance, well, it might be that I thought I had 100. Well, I thought I had 100 bars of gold, but there are only 99. Yeah. What happened? Well, maybe there was an inside job, but I cannot prove it. Yeah. Or maybe I didn't pay attention. I got a shipment. I thought it was 100 bars of gold, but it's really only 99.
Right. So mysteriously
if I go to the police, what's the police going to say? Yes. So I want to have a police report to send to the insurance company. So why should the insurance pay? Well, if you have mysterious disappearance coverage, the insurance will pay. We have that coverage. One of our key selling points is that we managed to get that coverage, which is very difficult to get.
Yeah, I understand.
And so that's one of the points, about storage of physical. Another issue is the jurisdictional exposure. In other words, a lot of our customers are worried about the eventuality of the US dollar having a currency crisis. If the US dollar starts falling in value, if people no longer trust it, then throughout history, governments will have to come up with a new currency which is based on something that can be trusted. And usually gold, silver, and so on, physical assets will form part of that new currency, which means there's a good likelihood that the government might try to nationalize that gold. And if you look at the jurisdictional reach of the United States, for example, it's huge nowadays. Every bank pretty much has to follow US dictates. If you're a global vault operator, you pretty much also have to follow US dictates because you have so many assets which are in the United States or dependent on US jurisdictional goodwill. So when you look at contracts for storage, you will find a clause saying that you have to identify the vault operator if nationalization or confiscation or a seizure by any government happens. And so I was saying, well, I'm in Singapore. I'm willing to trust that the Singapore government is the right jurisdiction for me. I only want to be subject to Singapore law. Why should I identify the vault operator against something the United States or Guatemala might be doing with my gold? So those two reasons basically were, the nationalization and the mysterious disappearance were things which I wanted to fix. And the only way to fix it is to build your own vault. So the other reason why I thought it was important to build our own vault is once we are vertically integrated, we are not dependent on third parties. And so if you're looking at reducing your counterparty risk, it's the easiest way is to only deal with one counterparty. As I say in the US, the buck basically stops with us. So you do your due diligence on us, and assuming you feel comfortable with us, you don't have additional risks. But as soon as I start outsourcing to somebody else, the counterparty risk complexity goes way up.
And why would, let's say, Singapore not nationalize, let's say, the gold and silver in your vault, Gregor?
So, of course, I mean, you never have an absolute guarantee, but I would argue that Singapore is likely the last country in the world to do so. And the key reasons here are that Singapore is already very wealthy. So the risk of nationalization usually is when a country has a lot of debt and needs to grab some sort of valuable asset in order to fix the currencies. So the need for Singapore as well is unlikely. But the bigger reason is all of the wealth in Singapore is based on the fact that international investors are coming to Singapore. So the majority of Western companies, for example, they base their HQ in Singapore because Singapore is a place which you can trust. If anything that Singapore does to destroy that trust, it's essentially like committing economic suicide. So A, you don't have a good reason to do it. B, if you do, you're committing economic suicide. And then, another ancillary reason, which often...
And we can add one point here that, and one thing that has set the Singaporean leadership apart from many other countries, I think, is that they've been very rational and taken an economic point of view rather than, say, populist. There's pros and cons in different systems, but I think no one would contradict those statements.
I moved to Singapore for exactly these reasons. I read a book called From Third World to First World, which was written by the Prime Minister of Singapore, Lee Kuan Yew. And in this book, it's almost like an instruction manual explaining how Singapore works and why. And I was so impressed by the book that I said, I'm leaving Germany, I'm moving to Singapore. Eventually, I've taken up Singapore citizenship. I left my German citizenship. So I pretty much admired the way this country is run. And if you look back to the 1960s, as the book said, Singapore was a third world country in terms of, the wealth of the country. And now it's one of the top 4 countries, in terms of personal wealth per person. And unlike a country like Saudi Arabia, where, the wealth comes out of the ground, you can behave any which way you want, and people are just going to buy your oil. In Singapore, it's very well understood that you have to work for your money. And so there's a very healthy type of attitude and understanding. So once you come here, you can sort of get a feeling for that. It's a bit hard to describe, but essentially, as you pointed out, Lee Kuan Yew himself said, it's important not to base decisions on ideologies. It's important to try something, see if it works, and if it works, you go with that. If it doesn't work, you go something else. So Singapore studied how things work in different countries, and they said, okay, does that system work for me? Does it yes? Does it not? And so on. And to give you an example, the Singapore government is split into ministries: Ministry of Defense, Ministry of Education, Transport, and so on. And every year, the budget is cut. So instead of having an automatic increase in budget, like just about every country, the budget is cut. And those additional funds are put in a common tub, and the different ministries have to try to get that money back out. So the overall budget still increases, but all of the ministries have to compete each other to try and get funding. And they have to get the funding by having some sort of improvements, either in the services they provide, in the efficiencies, or in something else like that. So Singapore managed with this very simple rule to inject a kind of competition in public services, which completely changed the work attitude of public servants compared to other countries.
Yeah, there is so much to learn from Singapore. Guys, if you've never been there, if you ever go to Asia, I think you should stop by Singapore and experience it for yourself. Let's switch gears a little bit. How about gold and silver as an asset? How do you see that going forward? There's been a lot of turmoil in the world the past year. Banks going bankrupt, getting bailouts in the US, in countries like Switzerland. But gold hasn't really broken out yet. How do you see the market?
So one thing you have to understand about gold and silver is that the price isn't really determined by physical supply and demand. The price is determined in the future exchanges, such as COMEX. And so it is quite easy for somebody using 10 times leverage to push the price of silver or gold down. So, and as long as I'm able to pick up the phone and I'm able to buy 100 kilos of gold at the price that is being provided, everything's fine. The problem comes when I can no longer get the gold, when the refinery is not willing to pay that. And since we started silver bullion back in 2008, that happened about 2 or 3 times. And usually once we get, what you will normally see is that they will still accept orders, but the delays will get longer and longer. They will get to 6 weeks and weeks. And you will see the premiums to increase. In other words, back in 2008, when I ended up going towards gold and silver, one of the reasons was that the price of paper silver ended up falling and fell down to $9.50. That was so low. But you couldn't go to a bank, you couldn't go to a bullion dealer and buy silver at $9.50. You couldn't buy any silver. And even gold was almost impossible to get it. I was in Frankfurt at the time. I went to 12 banks trying to get it. It was all sold out. And in the secondary market, you had to pay about $30 to get an ounce of silver.
Oh, wow.
And that was really when I realized that there's a real price premium for the physical, because if that gold or silver is just price exposure, which is backed by a future contract, which is backed by maybe 3% of physical holdings, which you can never take delivery of, and the banks, your middleman in between, goes bankrupt, you have nothing. So when you have a crisis, people are starting to pay extra for gold and silver. And the paper price will keep on falling, because when you have a crisis, then people start selling everything. They have margin calls coming and people just sell. But they will sell the paper silver, the gold silver. It's just pushing down the price. And as a bullion dealer, I'm in a situation where I'm having a good whose demand is exploding, it's going way up, and the price keeps on falling. And so naturally you're going to have shortages, because the normal market demand mechanism of supply demand doesn't work. And usually it's, as long as the crisis isn't too long, things will eventually kind of come back to normal. And that premium between physical and silver will kind of come back down to normal levels. But if the crisis becomes worse, if the bailouts are not enough to sort of get the system running again, then I suspect we're going to have a hard sort of fork, where your paper products will basically become worthless, and your actual gold and silver, the physical, will become much, much more valuable. But until the price is determined in the paper markets, your appreciation will probably always have all these other factors coming in. And so when I look at gold and silver, the way I explain it to people, don't look at it so much as an investment, look at it as a wealth protection. And when things go really, really bad, that gold and silver will essentially become extremely valuable. But it has to be physical, because by the time the crisis comes, you won't be able to get any physical. And if you have the paper, you have also this counterparty risk, which is the very thing we want to avoid, because we want to be outside the system when that happens.
Yeah, the difference between the paper gold and the real gold doesn't matter until the day you actually need it, and then it's all the difference.
To some degree, we have some customers which will buy the physical, and then when a crisis happens, they will start shorting gold with paper. Because they expect to go it down first. But the important thing is to basically have the physical, because that's all that matters, once the system goes.
The last couple of years, essentially since maybe 2020, Gregor, what have you seen in terms of the physical market? Is it, and we hear about the silver squeeze, obviously, which is a very popular movement going on, and sometimes, and even the last couple of weeks, I'm hearing from a lot of bullion dealers in the US that they basically sell about 95% and they have only a 5% ratio of gold and silver being sold back to them. So what is the current situation of the market as silver bullion perceives it?
Well, one thing to differentiate is that when it comes to silver, a large part of silver is in LBMA 1,000 ounce bars. So sometimes when you talk with bullion dealers, which are dealing mostly with retail, they might be referring mostly to coins, and these coins are might run out very quickly, but the investment grade 1,000 ounce bars you might still be able to get. So that's an important distinction to sort of keep in mind. Right now, we don't really see shortages. I do believe silver to be the better investment compared to gold at this point, because the gold-silver ratio is around 80, which means silver is cheap. And silver is about around 200 times smaller than gold as a market. So you can see the price go up and down very quickly. I do believe at some point silver will, I call it the forgotten metal, because whereas in the US it's quite popular, in the rest of the world, silver tends to have a tax on it in most countries, in Germany, for example. So people don't tend to buy it, and yet silver is being used up for industrial uses. And that's where a lot of it went. So I think silver is a great investment. Do I see short-term shortages or a squeeze happening? Hard to tell, because again, a lot of these prices are determined in the financial markets. And so it's really a psychological sort of effect. What you will see in the US is when coins become rare, the premiums will be going up. So in the US, the silver premiums, people used to pay $2 premium for a silver coin. For a while, it used to be $8 in the US. So people were really keen on buying these coins. But keep in mind, you can buy an LBMA bar and, maybe only pay 50, 60 cents. That's still an option that is open. So I don't think we're not too late to buy silver. But I do believe that at some point we'll indeed have a squeeze, like I said. I'm just not sure we have it right now.
And maybe to link this, Gregor, because it's quite interesting, right? Maybe I don't necessarily have the money to buy a whole physical LBMA bar, let alone, let's say, maybe a large amount of gold. And I believe one of the offerings which you also have is like a gold grams account. Can you talk about that a little bit?
Yeah, so essentially we had people asking for an ability of, say, buying $100 worth of silver or of gold, per month in a kind of a savings account. And as we are increasingly working with wealth managers and family offices, oftentimes they're saying we want to buy $1 million worth of gold. But if you're dealing with bars, maybe you're buying $987,772 worth, because that's kind of, that's how many bars you're buying. And they're used to buying 1 million exactly. So we had quite a number of different entities that essentially wanted something more flexible. And we sort of had the challenge of saying, how do we still have a transparent way of backing all of these holdings and have a kind of fractional ownership, which is fully allocated with all the silver being there. And so we used an asset tracking system, a new version, which is a more updated version from original star storage tracking, which we basically developed, and we're using that now to basically start with the star storage gram system. Right now it's only gold. Silver will be coming pretty soon. I'm looking to add nickel kilos as well. Platinum should be coming after that. So we're slowly rolling that out, and it essentially allows for fungibility, and storage rates are around 35 basis points, which is pretty cheap. To give you an idea, if you're buying the paper GLD on the stock exchange, you're paying 40 basis points. And most people don't know, by the way, when you buy the GLDs that you're paying storage fees. It's just that they keep on reducing the value of each ETF share by 40 basis points every year. So we believe it will be quite a popular product, and it has all of the transparency, essentially, that we have with the original product.
I have a question. the criticism to gold. Let's take that also, because it's usually coming from two opposite directions. One side is kind of Warren Buffett, for example, and who say that you shouldn't hold unproductive assets. You should hold productive assets, like companies that generate cash flow. And that's much better than gold. Then on the other side of the spectrum, we have technology saying that gold is that was last generation. Now we have digital gold, we have Bitcoin, and then they hate each other, both sides of this side, and gold is kind of in the middle. So if we have these two criticisms from two sides, what is gold's role really in the modern society going forward?
So gold's role is that of a non-political store of wealth, essentially. That's going to be there no matter what. Maybe, to start off, we had many societies around the world which decided on silver and gold, to some degree platinum, as being their store of value. And that's because to have a store of value, a physical one, you need certain characteristics. You need to be able to cut it into smaller pieces. You don't want it to rust, because that would be a problem. And so they all ended up using these precious metals as a store of value. So you have a 5,000-year history to it, and our currencies have almost always been based off of silver, off of gold. And then along the way, we end up printing a lot more currencies than serious, and then we get caught with our pants down, like in 1971, and we're saying, oh, sorry, we printed more, but we don't really need this old stuff anymore. Really have full faith and trust in the United States dollar, because we are the best thing since sliced bread, so trust us. And usually when that happens, that's when the real money printing begins. Instead of printing twice as much money as was backed by gold, they're now printing 100 times, 150 times more. And everything goes fine as long as there's trust in the currency. Once, we start losing that trust, suddenly you have to find something that can be a replacement for that. And so where do you go? Nowadays, where do you go? Do you take the euro? I don't think the euro is that great a storage of wealth. Do you take the Japanese yen? Well, they're even more indebted than the United States. Do you go to Chinese yuan? That one is not publicly tradable. Do you take the Swiss franc? A lot of people have it already, right? So you really are running short on options what you can do. Now, of course, you've got things like Bitcoin. So I've been fascinated with Bitcoin, and I've done quite a bit of projects into this, so I know it quite well. And of all the cryptocurrencies out there, I think Bitcoin is maybe the one thing that makes sense to own. But keep in mind, you have a 5,000-year history with gold and silver. Do you want to bet all of your eggs on Bitcoin being there when something happens? Because remember, the US government might just make it illegal to have Bitcoin, just like they made gold ownership illegal in 1933. And Bitcoin has certain things which are better than gold, and it has certain things which are not as good as gold. And so I see the value really between the combination of gold and Bitcoin. Because I'll give you an example. I have some customers who are saying, okay, so I'm taking my money, I'm buying some gold on the other side of the world, and it's all safe and good, but now I need money, and my gold is in Singapore, and the banking system is down. How do I get my money? Right? It's a very legitimate question. And that's where Bitcoin can come in. Because Bitcoin, we allow people to essentially sell the gold for Bitcoin, or use Bitcoin to buy gold. You can have the Bitcoin sent to you, and assuming that Bitcoin is something that you can use in the United States at that point in time, because that's an assumption, you will be able to have a way of getting that. Bitcoin is this ethereal thing, and you have advantages of it being ethereal, but obviously you also have disadvantages. And one of the problems is, if it really Bitcoin really is banned, how do you convert it from, say, Bitcoin back into US dollars? Or how do you get a store to accept Bitcoin? Because the value of Bitcoin is just what people believe it to be, and what you can do with it. So again, you have challenges. Bitcoin is not the answer. It might be one of the answers. Gold and silver, definitely are also one of the answers. And so I think it's only prudent to sort of have a bit of both. And what I do agree with, as a technologist, is that you should be very worried about counterparty risk in our financial system. And what I would be saying to Warren Buffett is, This is a person who's done extremely well, and it has always bet for America. But remember, he happened to live at a time when he witnessed all the growth of the United States. So if you look at the history of the US dollar as a reserve currency, he really, had all the way up. And he did extremely well with his value investing and so on. But when things are sort of ending up going into a crisis, that's when gold and silver suddenly makes a lot of sense. Very much depends where you are in history.
Absolutely. And I agree with you 100%. I feel that there is a diversification need. If I think Bitcoin is great. I think it's a great innovation. I believe in it very much. But I cannot, be sure that in the end Bitcoin won't be replaced by something even better, for example. That could happen, but usually happen in technology. It seems impossible until it actually happens. I don't think the technology will go away, but it is possible that at some point in the future it gets replaced, for example, or that it starts threatening the power so much that it kind of starts getting more and more restricted, and we see that already happening. They won't say in the US, they won't go out and ban it probably because it would be quite unpopular among quite many people, but they could make it so difficult to use that you start having problems cashing it out, for example, that the bank isn't honoring the conversion anymore, or they kind of close your bank account or something like that. Also, I think many people into Bitcoin, they don't really want to convert it to fiat, but I think many people into Bitcoin would love to be able to convert some of their Bitcoin into physical gold. For example, if the price is in a downtrend, Bitcoin has been very volatile on this channel over a great many years. We've been able to show that it's possible to sidestep some of the downtrends while riding some of the uptrends. But then comes the question, okay, but what do you do with your money in between? It has turned out that the bank is problematic for two reasons. One is the on and off ramp. They can make it difficult for you. The second is that people don't really trust the banks anymore. But what if you could take your Bitcoin and convert it to physical gold in your vault and then convert it the other direction at some later point of time? Because I think there could be an enormous market for that, and you might need to get an even bigger vault.
We've been doing that for 6 or 7 years already. So we started probably 8 years already, actually. One of the things we did, and you might not know this, but we actually built the first storage system for Bitcoin, which managed to get Lloyd's of London insurance. We used a Blu-ray laser to essentially take a private key, encrypt it synchronously and asynchronously by making two cards as a backup card. We put that card into our vault along with the gold, and on that address you could transfer up to $5 million and have Lloyd's in London insure it. So it's a whole process for removing it. If you steal the card, it doesn't matter because it's encrypted, you can use it. And we have a backup card. So, and because we never stored the key digitally, it was essentially hack-proof. We've been quite involved with Bitcoin for quite a long time. The biggest problem is exactly what you mentioned. Financial institutions see this as a threat. Financial institutions put a lot of restrictions on this, and liquidity is just getting harder and harder. We have to do a lot of AML KYC checks when we do these transactions, but we can do it. But that's really the primary problem in the industry. I think it will only get worse. If you look at what the SEC is doing now, suing Coinbase, suing Bittrex, suing Kraken has problems and so on, this essentially is a big, huge problem. And most people don't realize how difficult it is becoming to have these conversions this often on ramp. And I might just add another thing, because we talked about...
Just to touch on that more, isn't that exactly the opportunity? Perhaps we don't need to convert it between fiat and Bitcoin. Can't we convert it between Bitcoin and physical gold in your vault? Maybe we don't need the bank involved.
Yes, the problem is we usually still need to convert the Bitcoin back into US dollars in order to buy more gold. So it's just not enough entities in the market which are accepting Bitcoin for gold, which are providing liquidity directly. So because you need to go back, it means you're still facing all of these sort of issues going back and forth. Now, if you can net things out, you can minimize that problem. But these are some of the interesting sort of
Maybe you could be that party.
areas that
You
are
could be
also-
that party who provide the transactions. Sorry, broker the transactions.
Yes, and we're doing some of that, yes. Going back to counterparty risk, maybe just to give you an example, because when Signature Bank went bankrupt, what people often don't realize is they might say, okay, how much money do I have in Signature Bank? And as long as less than $250,000 is FDIC insured, so I'm not worried. But, one of the entities which held a lot of money with Signature Bank was Kraken.
Yeah.
And I don't know how many $1 billion they had with Kraken, but if the government wouldn't have decided to bail out the uninsured deposits over $500,000, then what would have happened with the people who had a balance at Kraken? Because Kraken is depending on Signature Bank. You see what I mean?
We had USDC
Yes.
who had the money in Silicon Valley Bank, and that lost its peg severely over that weekend when it wasn't really clear if they would get bailed out or not. So absolutely.
Yes. So even with the crypto world, it sometimes people forget, I'm using USDC and I'm using a crypto token, therefore I'm out of the system. Not really, unless you have it in your own wallet and it's an intrinsically valuable token like Bitcoin. You have a lot of counterparty risk involved. At the end of the day, I think, you take Bitcoin, you take gold, you take silver. These are things that are intrinsically valuable. And if you store it the right way, you really are outside the system. But otherwise, we always end up being caught up in these counterparty risk issues.
So guys, if you have Bitcoin and you want to convert that to and from physical gold stored in an actual vault owned by yourself, you know who to contact. And if Gregor, you become the world leader in this enormous market in the new world going forward, guys, you heard it here first.
Thank you.
Couple of words on the reserve and where you are in the whole construction process, Gregor, because that's a tremendous endeavor which is going on.
Unfortunately, we had a bit of the delay. A lot of the construction in Singapore is being delayed because of manpower shortages and cash flow issues with some of the main contractors. But we managed to sort all of this out. The facility will be finished around October, November timeframe. We just finished installing all of the class 2 vaults. So that's 450 tons of composite steel being assembled. We are now going to the facade. That's partially there. We're doing some light tests to see how it looks with the light. The onyx, we had a few panel up, but main installation will probably start in a couple of weeks. So we're essentially at the point now we're sealing up the building, and once that is done, the interior work is going to start.
Maybe you can also explain how tall the silver vault is, because I think that's quite interesting for folks to recognize.
Yes, so in our business, you see, especially when you store silver is heavy. So the more silver you can put on a square foot or square meter, the more efficient you go. So when we bought this building, I was enamored. I mean, I just loved the floor loading of the big hangar-like rooms that we have. It's about 20,000 square foot in size, and it has a 90 kilonewton floor loading. So to give you an idea, a typical car park has 2 kilonewtons. That's how much weight you can put on it. It's about 200 kilos. For us, we have 90, so we have 45 times stronger than a car park, which means we can put over 9 tons of silver, metric tons, in every square meter, which means we can stack up silver 12 meters high. That's about 38 feet high or so. So we're planning to build these canyons of silver. And along the way, we will be able to reduce our storage costs, by a very large factor. And that's really what's giving us this humongous capacity. So in addition to silver, in this room, which, as you asked, is about 32 meters high, which is about close to 100 foot, basically, in height, we are planning to store metals like indium or germanium. These are high-value industrial metals, quite rare, which have a similar value to silver. They're about $500 per kilo. And we are quite lucky because in Singapore, the LME warehouses that normally store these metals are very hard to upgrade because of fire regulations and so on. And the insurance, because of theft around the world, no longer allows them to store these metals. So essentially, we plan to fill up this huge capacity with silver, but also germanium, indium, and other high-value metals. I hope you guys can come and see it sometimes, because once we open these vault doors and you go through this canyon of silver, it'll be quite something. You can see some of the videos on our homepage, some of the renderings. But towards the end of the year, it will be real. And if you're coming to Singapore, make sure to come visit us.
So, Greg, I have to ask you one more thing. You know this famous scene from Breaking Bad where Yul lays down on top of all the money?
I gotta do it, man.
Dude. What are you doing? Yul! Ah, screw it.
Have you ever laid down, on top of all the gold and the silver?
I have. At one point, I built a throne for my daughter. My daughter is called Daenerys. So, she is mother of dragons, which should make me the grandpa of dragons, hopefully. So, yes, but unlike dollar bills, silver or gold is a lot harder to lie down. So you better be careful not to do it too quickly because it's painful.
This is not a paid interview. I've not been compensated or stand to profit from this in any other way. It's not an endorsement. I just found this so interesting and I'm delighted I could share it with you. Check out our commodities section on ctolarsson.com. Like and subscribe. So, Gregor, if people are interested in your services, how do they get in contact?
Well, the easiest thing is you go to silverbullion.com.sg. Website has pretty much all the links on there.
Guys, if you didn't find this interesting, I don't know what to tell you. I think that this is really revolutionary. It's been around for some time, but I didn't know about it until Mark told me about it. Thank you, Gregor, for sharing this. Gregor, you have to say thank you, tack. Thank you in Swedish.
Thank you, tack.